And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to this week's Wealth Within Market Update. I am Jim Beach, as always, and joined by Dale Gillham, author of Accelerate Your Wealth. It's your money, your choice. You can find him at wealthwithin.us. Dale, good to see you. How you doing this week?
Me, I'm doing fantastic, Jim, and I'm staying safe. I'm doing my social distancing. I think I've been out for about 2 hours in the last 10 days. I've been very isolated here, but that's what we need to do to try and knock this on the head and get everything back to, or getting, the economy back on track again and not just stay safe. So hopefully you've been staying safe with your family too.
I hope so. The only place we've been is the grocery store with the full mask and glove regalia on. And of course, just looking awesome. And yeah, I'm surprised how well stocked our grocery stores still are. And so, we're starting to hear the beginnings of some shortages of ground beef and pork. But other than that, and the toilet paper, of course, but other than that, the world seems to be moving on. So let's talk about the market. Let's let everyone know we're filming this Monday evening. The markets have just closed down about 330 points today. But last week, Dale, it just was a straight up rocket. I was, as the week progressed, getting more and more uncomfortable. It seemed to me like a little bit of irrational exuberance again. I was anticipating a larger fall today. What are your thoughts?
Yeah, look, when you're looking at the market, this is sort of what we've been saying for quite some time. I did think the market would go up for anywhere between, 1 to 4 weeks, but it was likely to be a suckers rally where people are getting into it thinking it's now going up. And these are largely your uneducated people. They're jumping in trying to grab bargains and trying to make some money on stocks rising. But the challenge, what they're finding is they actually don't know that the bottom's in. And in fact, the question I've been asked most over the last 3 weeks is, has the bottom happened? Is where it is now the bottom? And at the end of the day is nobody actually knows when the bottom's in. As I've probably said before, nobody just stands there with the big buzzer or the bell ringing and saying, okay, the bottom's in, everybody can get back into the marketplace. And trading right now, or buying stocks right now, is exceptionally high risk, because I seriously do think over the next few weeks and in the next month or two, we're now moving into reporting season, and we'll probably talk about that in a second, but this is a really dangerous time. And I did say to you, I think last week or the week before, I thought the Dow could go as low as 15,000. That's its strongest support level. And I still think that, and I still think 15,000 could happen in the next month, and it really does depend on reporting season. But I know the S&P posted its strongest gain since 1974. It was up 12%. So how did it rise that fast with this much negativity? And part of it might have been the short sellers covering shorts as it started to rise, which accelerates it, because when they have to close out their position, they have to buy into the market to close out a position. So they do the opposite of everybody else, and when that happens, you see a spike, or you see the market move up quite quickly, or a stock move up quite quickly. And so that's probably what caused some of last week's move. But if the reporting season turns out to be bad, we may see the S&P fall down to around 2,000 points over the coming months. But as I said, I think we could be seeing a suckers rally.
I have to agree with you. It just didn't feel good to me. I feel that if we would get one horribly bad news result, that the number of deaths goes up again instead of going down, that a second wave has been confirmed, or something like that, I think that the market will just fall, the bottom will fall out again, because I feel like right now we are just hoping so hard that things are going to get better, and we're wanting it so badly that it would just almost irrationally came to be. So anyway, let's dive into some of the market specifics. let's do reporting season in just a minute. I wanted to talk about oil first. We do seem to have a deal in place where production levels will be dramatically cut. I've heard several different numbers of how many millions of barrels per day, but it should help. How's it going to impact the market?
Yeah, well, OPEC did agree to cut it. I mean, the figure I got was about 9.7 million barrels a day from the global crude output. But I had a big look at, I knew you were going to ask me about this, and I had a big look at things like heating oil futures, light sweet crude oil futures, West Texas oil, and had a look at all their charts. And I went, and to me, I got no good news. I don't think the oil price being as low as it is really going to support anything to do with oil production in the US. And in fact, I think it's going to be very doom and gloom for oil producers in the US, the shale oil producers, etc., because it costs more to produce oil from a shale oil. It costs more to drill holes and keep that running. And I don't think maybe 10 million barrels a day is going to be enough to really soak up the supply or the oversupply that's already there. But we also got to think about the oil demand is very, very low. I mean, normally this time of year, everybody's out on holidays driving around and you get a bounce in the oil, the demand for oil. That's not going to happen. And so I don't think the oil price is going to rise anytime soon, and I don't think a lot of the oil producing companies throughout the US are going to benefit from this, because all of the charts look really bearish to me, and I think there's possibly even more downside to come. But as I said, heating futures, or the oil from heating oil futures, light sweet crude, all of them aren't looking that good. So with the demand falling, I don't expect to rise anytime soon. So whilst we've got cheap fuel prices, we can't go anywhere anyway. So we're all locked at home.
And I just don't feel like we're going to go anywhere this summer. I've been talking to my friends, and just from the experiential data that I see, we're all going to be very happy to be released. Then we're going to go to the park around the corner, I feel like, not going to drive cross country or go to Florida or anything. I just think that the oil markets will stay depressed all summer. This incredible situation where people are now having to pay to have oil taken away because there's nowhere else to put it. Unbelievable situation. So
yeah, it is. And you guys have moved into you're moving into your summer period, which is your busy tourism season for yourselves, whereas it's going to be a lot easier for us here in the southern hemisphere. We're moving into winter, and really we can stay at home in front of the fire, which is fine. But so I think it's going to be challenging to keep everybody away from everybody over the coming months.
Yes, it is. All right, let's talk about the earnings reporting season. What are you expecting here? Or huge differences? Some companies up and some companies down, depending on their market segment. What are you going to expect?
Well, I think this is going to be the most interesting reporting season I've probably seen in a decade since the GFC. It is really, really going to tell us what is going to happen and what might happen in the coming months and or year. And it simply is because as a company, how do you report what you don't know? And what I mean by that is we don't know how long Trump's going to keep everything closed for. We don't know what the supply chain is going to be doing in 1 month or 6 months or 12 months. We don't know a lot of things. So when you're a company, how do you plan for that? If you're a large company, a large producer, whether it's or a service business, how do you plan for your staff? Your staff aren't working now unless they can work from home. So it's going to be a very, very interesting reporting season, and we are starting that off in this next week with a lot of financial firms reporting. And obviously, financially, we need lending to happen. We need building, construction to happen to support the building industry throughout the US. So, to me, even the experts don't really know what's going to happen with this earnings season. So it's not surprising that mum and dad investors don't really know what to do. But I think we're going to get some shocks. There's an old saying, the market goes up in stairs and comes down in elevators. So this could be the catalyst to send the Dow and the S&P down. And as I said, my projection for the Dow is around 15,000. If it can't hold at 15, then the bottom's a hell of a lot further away than that, and I'll update you on that next week. But I think we're going to get a lot of bad news from a lot of companies. We're going to get them overestimating how bad, because they probably need to do that. But again, we're going to have some good reporting as well. There are companies that are benefiting greatly from the current economic climate, and those are the stocks we need to find if you want to buy stocks that will rise in value. So I'll be eagerly awaiting those stocks as well and telling people where I think they should be going. And I have mentioned some over the past few chats that we've had, some of the chip manufacturers, your people like your Microsofts, your Apples, they'll all still do okay. They may not do as well as what they could be doing in a normal market, but I think a lot of those technology stocks will do well because we're working from home and we're needing more technology and technology services. But over the next few weeks, we'll start finding some of those little gems in the rough, if you so to speak.
Another interesting dynamic, I think, is going to be a real animosity building right now towards some of these financial institutions. I was watching the television this morning, and one of the financial reporters was incredibly belligerent toward Chase because of the pace of the loans that are being given to the small businesses. The loans are guaranteed, but they're still being denied by the financial institutions. I think that this group, the Banks of America, the Wells Fargos, the Chase, all of them, if they come out with positive earnings, they are going to be shellacked tomorrow in the next week. The animosity toward these organizations is overwhelming right now. And the small businesses are getting really upset with the financial institutions and blaming the financial institutions, not the government, interestingly.
Look, I totally agree with that. And, I know, we talked about it, probably a month or two ago, and I said, there's more to this whole thing than just the coronavirus. And I think, we're seeing there's a lot of conspiracy theories about what China was doing and how things are working. But I also think there's going to be a massive, massive shift in the way the world does business and in the way people see business being done and shifting to a lot more security. I see a lot more people continually working from home. I see a lot more shift in how businesses get their funding and do other things because we want some security. So this old guard of the financial world, this could be the first sort of step in I won't say the toppling of the big order, if you know what I mean, but it could be a whole restructuring of the order. And people do need to get more security for their businesses. And I think people also need to find different ways to secure their own family, their own financial well-being, and to me there's a big shift in this world happening right now. There's going to be shifts in supply chains, and I can guarantee you there's going to be a lot less companies getting supplies from China and getting China to do stuff for them. So there's massive ramifications that are happening right now around the world, and I think that's only going to build and build and build over the coming weeks and or months. And I'm sure when Trump allows people to get back to work a little bit and eases things off. Right now New York is in lockdown, and the whole world's eyes are on New York at the moment and praying and hoping they can get out of this soon. But as soon as New York gets going, I think we'll start to get some more normality. But I think these big financial groups have got a lot to answer for how they've dealt with people, not just now, but over the last 100 years or more. I think there's a lot of people that are needing to decouple from that traditional way of financing, and I think we're going to see a whole lot of new stuff coming out, new ways of financing, new ways of running your business, new ways of doing what you need to do. It's an exciting time if you ask me, and it's an exciting time for entrepreneurs and people with good ideas.
Entrepreneurs love disruption. There's nothing more exciting for an entrepreneur than disruption. And so let me ask you this. I had a good friend call me. He's in the construction industry. He does mostly maintenance of existing properties. And I know he's got a little bit of corporate debt, and he's laid off about 50 employees. And he believes strongly that his industry is going to take years to recover. And my answer was, I just hate my answer, Dale, but this is really what I think that a lot of people should consider. And the reason I brought this up, I want to get your thoughts on this. I think for a lot of the small businesses, you just go ahead and kill them now. Get whatever money you can out of the government. Go ahead and put them into bankruptcy. Find the pivot. Find the new version of the same model that's going to work in a much more work-at-home type environment. And then start on a new business clean, as opposed to trying to clean up the mess and build a new business at the same time. I just hate to say it, but I think it's time to go ahead and shoot some of the horses and get on a new stallion.
Geez, that's sort of one of those 6 for 1, half dozen sort of the answer to sort of that question, whether people, a lot of people with their business, especially small business, that's their life, it's their dream, it's their passion, and when they're in debt, obviously there's a lot of heartache and a lot of pain, and there's a lot of should we do this or should we do that, and I really do feel for those people that are in debt. But the thing is right now the market's been driven by uncertainty. I mean, we're just talking about the earnings season. The estimates between the highest and lowest estimates of what might happen. There's a huge chasm in between what we think is the worst and the best at this point in time, and that's the largest it's ever been in history. So, and this uncertainty is driving, the stock market at the moment, but it's driving people to stay away from, being in business. So, how do you make a decision when you don't know the outcome? If Trump said, hey, we're going to open up everything next month, you'll be back in business for next month, then you've got some certainty, you know what's going on. But what if Trump comes out in a month's time and says, hey, it's going to be another 3 or 4 months or another 6 months or another 12 months? We don't know. So to me, it might be better just to bite the bullet and go into bankruptcy and clean all that up and then come back into business once we know some certainty. Because one thing I know for sure is good business people have it up here. It's they know how to run a business, they know how to run it well. We just need to give them a chance to get out and get started again. And if you're digging a bigger hole, that might turn into a grave, and you might end up getting buried in that grave if you hang on for too long. So I think what they need to do is just draw a line in the sand saying, I'm prepared to do it for this period of time. At that point in time, then we go into bankruptcy. But I would expect bankruptcies to be going through the roof over the coming 6 to 12 months of businesses trying to hang on long, but you're better off cutting it off earlier. Like my mum always said, when you want to take a band-aid off, do it fast. So cut it out pretty quickly and then move on and regroup. So, but I do wish everybody who runs a business in the US all the best, and I really do feel the pain for you, because I've been there. I've had a couple of failed businesses in my past, so I know exactly what you're going through. Now we're busier than we've ever been, so we're doing very, very well. So the coronavirus has given us lots of opportunity. So I would look for what's the opportunities out there, how to restructure your business or rework your business or other avenues for bringing revenue in. So in times of adversity, the entrepreneurs get out there and do better, and they make the money. So don't ever think of doom and gloom constantly. Think of what you could be doing, and I think that's really where we need to focus on. But really, really do wish everybody the best.
Great advice, Dale, and I certainly share your sentiment. Final words, what do you think is going to happen the rest of this week?
Look, I'm almost ready to flip a dollar coin and just go, is it going to go up or down? It could go down this week. It's, we have had our week up that I was expecting, at least 1 week up. As I said, 1 to 4 weeks up, and then start falling away. But it'll be interesting to see what happens this week. So my bet is, with reporting season, we only need a couple of bad reports to come out in this week, and I think that the elevator will start to go to the basement, and so we need to be prepared for that. So I'd rather err on the cautious side, thinking it's going down, than being overly bullish. And normally I'm a more bullish person than a bearish person, but right now I think it's time to batten down the hatches and get into the storm shelters and ride this one out.
All right. Dale, I wish you and yours the very best. Wishing everyone a safe week and a prosperous week. Get those PPP documents in, everybody. The system will eventually catch up with us. Dale, Godspeed to you and yours, and we will be back next week.
Stay safe, Jim.
Take care, everybody.
Please remember that this report is an educational tool. While Wealth Within holds an Australian Financial Services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, it was a fantastic week last week on the Dow, wasn't it, with it rising quite nicely, but it's still a lot of indecision on the marketplace because we're seeing the market close higher one day, down the next day, but it does look a little bit better being up rather than down like it has been over the past month. So let's go and have a look at the charts at this point in time. Now, on your screen, I do have a weekly chart of the Dow Jones, and let me just drag that over so we can see it a little bit. So we can see here, whilst this week here back in the ending 27th of March closed high, it was technically what they call an outside bar. Last week, or the prior week, it was down with a range of 1,745 points, but interestingly this week it gapped right up and traded up, and this right through here there was a lot of indecision, but closing right up near its high, that's a nice strong sign. Now when I say strong sign, I'm not talking about, hey, the market's bullish, you've got to jump in. That's what I'm not talking about. It's a good sign, and one day, 1 week, 1 month does not make you a millionaire or make you rich. It's one of those things. The market, you need to look at a medium to longer term view, not over a day or over a week. You do need to look at it in context, and really right now the market is volatile. It's very emotional, so we're getting a heightened emotion there, which means volatility will continue to reign while we've got heightened emotion. So the market, any announcement, it'll drop like a lead balloon. It'll just drop out of the sky for you. So it's still a dangerous market to be in. But let's go and have a look at the daily chart, and I'll just show you what I mean in terms of some of that indecision. You can see here it sort of gapped up and got closed higher, and look at this bar. It tried to push up and came right back down again. Indecision. Even though it closed higher, it was indecision. So it closed up strongly there, and then more indecision. It closed down that day, moved up that next day, down the next day, closed low, then it was down. It closed up the next day, down the next day. So if you look at these opens on the left, closes on the right, they're all mixture up and down, so it might gap up and close lower. So this is really indecisive, and even Friday is an indecisive bar. Sorry, Thursday's bar on the 9th of April is very indecisive. We're talking about a 504 point range. Open at 23,690 and closed at 23,719. So pretty much closed where it opened almost. Now that's a sign to me that it will probably trade down when it does open after Easter. You might see a bit of a downward move. Now at this point in time, what I need to look at is where is it likely to go, because whilst people come out there and they say, hey, you can't predict the market, that's exactly what everybody wants me to do, is like, where is it going to go? Now you can spend all your life looking at the left hand side of the chart of what has happened in the market and has happened with stocks, but people want to know what's going to happen on the other side of it, on that right hand side of the chart. So that white space that you see on my charts, people go, how is it going to unfold? When is it going to make its highs? When is it going to make its lows? And that's really the question that we're looking at here. So I'm going to give you some of my thoughts on where I think it might go. Now you do remember I've talked about the market, saying the market will go up for 1 to 4 weeks. So we've now had at least 1 week up. So how far it moves up in time and price now is really important. So if we see a move right up through into there above that sort of longer term momentum area, which is that grey line that I mean, and then when it comes down, this will tell me a lot. So coming down tells me more than the going up. If it goes up in a longer time, if this thing get back up over that 26,000 points before it starts to fall away, preferably up around 27 to 28,000 points before it starts to fall away, then all the better. And if the move downwards, when it does move, it's only slight before it starts to move up, that looks much, much better for the longer term move of the Dow. But if this move up falters and it sort of only gets to roughly there or even there, and then it starts to fall, then what we might see is that it might just fall out of bed, and it's highly likely it will fall down to there. Now, you know, I talk about with Jim that the Dow could go down to 25,000 points, and you really do need right now is to expect the worst. And what I'm not saying it's going to happen, and nobody can guarantee anything's going to happen, because even as an expert, there's not one expert out there that knows exactly where the market's going to be, or has had its low, or it's about to have its low. None of us know that, and we can't know that because it really depends on what's going what news is coming out, the economics and fundamentals that are coming out. Over this next month, we might get a little bit more of a sign on that with earnings results coming out next month, so we'll get a lot more better, or a better understanding of how the market is reacting and where the companies are going to make profits, how far the hit's going to be in terms of earnings. Obviously, we expect a negative earnings over the first quarter 2020. Probably, most likely, also the second quarter 2020 would be down. But have we factored it all in? One thing I'm pretty confident on is 80 to 90% of the falls already happened. So when it does fall, it may not fall much below the prior low from last month. But let's get into the questions that you have for me. Now, we've got a lot of questions in this week, so thank you for those people that did send them in. Now, remember, this is the US stock market report, so I'm only putting in US questions into this report. But let's go and look at the first one. Now, the first question we've got today is from Jaspreet, who says, "Hi Dale, a new subscriber. Thanks, mate. Very good to have you on the channel." He says, "I've learnt a lot from your show. I'm glad to hear that. I have some spare cash to invest and are waiting for your go ahead. Waiting patiently as of now. Can you please discuss if Zoom is a good stock to buy? And also, there is speculation that the market will bottom out between 3,000 and 3,400 points. What are your thoughts on this?" Many thanks. You are producing good quality content. One thing I'd suggest you to do is don't even look at the speculation. It's really about, you need to know, and that if you're going into direct investing anyway, whether it's stocks or whether it's property or whatever else, the thing is you need to know what you're doing, you need to know why you're doing it, and you need to know how you're managing that. So there's a lot of speculation around the market at the moment. There's a lot of speculation around the economy at the moment. There's a lot of speculation on how long things are going to last with COVID-19. There's a lot of speculation about where unemployment's going to go. It's just speculation. And when speculation is around, that means stay away, stay out, wait till you get some normality, because one thing I know with 100% certainty is markets change, people don't. And so it's better just to sit back and wait till the dust to settle than jump on in. But saying that, you're asking me about Zoom, and Zoom has taken off like a rocket simply because everybody's having to use it, having to work from home. So you're seeing this huge big move on Zoom from around about October last year. Now, I've been using Zoom with a lot of meetings for, well over 12 months, lots of people. It's got a little bit more people getting into it and using it over those 12 months, and it's just become pretty much normal for me to be using that. I don't subscribe to it myself. I did talk about it with them about 12 months ago about subscribing to them, but there's a lot of other services around, like Microsoft Teams is the new version of Skype, so to speak. I think Skype, from memory, is going to be phased out by Microsoft over the next 12 months, so Microsoft Teams will take over. So I do see a lot of companies going into that. But is Zoom a company you want? This is telling me that there's a lot of speculation getting into this stock quite early, trying to make some money in March while everybody was moving to working from home. Now, as I've said to Jim, and I've said on this reports before, I think everything's changing now. We're seeing a paradigm shift in how we do things. I was talking about that over a month ago with Jim, saying I think this is going to be bigger than what we ever think in terms of how it's going to affect things. Companies will be downsizing their commercial properties. They will, because more people are going to be working from home. They feel safer, and as long as the company can trust that the productivity is there and the employees are happy and the companies are making money, why wouldn't you do that? And we've had employees being able to be working from home for 5, 6, 7 years, and we've been doing it pretty much full time now for 2, 3 years. We don't have much in terms of we didn't have to adjust anything with COVID-19. The people that were working with us in our little office, we just sent them home, and we had them already set up to work from home. Not because of something like this might happen, but because it's just better for our employees. They get better. They're much happier. They're more productive, and if employees are happier and more productive, it's better for the business. And so it's working really, really well for us. Is this going to continue on? I think we've got a lot of services out there doing this video streaming, and I think a lot more will come out. Is it time to buy Zune now? I don't think it is. I think the time was a little bit earlier. I think it has moved down, and obviously looking at that weekly chart, it closed up. I'd like to see it move up a little bit from here and really show me that it's going to stay up at these levels. But it's not a bad pick, if that makes sense. I think it's all right, but I don't expect it to rise 170% over the next few months. That's really what I'm trying to say here. So let's look at the next question. Now, I'm really going to struggle with your name, mate. Ragu is what I'm saying, 99, Ragu 99. He says, hi Dale, I'm from Cupertino, California. I love Cupertino, it's a beautiful area around there. I know I've had lunches around there when I've been in California. I do like that sort of area, and I will be visiting again another day when I get back to the States, but when I'm allowed to travel I'll be heading back over to the States, but from now I'm safe and sound in Australia. If you're watching from the US or Canada or anywhere in the world, please just tell me. Say, hi Dale, I'm from wherever I am. I had people from Italy, I've had people from Canada, I've had people from all over the States saying, hey Dale, this is where I'm from. So thank you for watching the show, and please put on your questions. Really happy to help out. But they wanted to know if I missed the market bottom and should get in now, or is this a dead cat bounce from the stimulus packages, basically. He says, so should I get in now or do the S&P index, or wait for the bottom around 2100 on the S&P? Now, again, it really looks about whether you're short, medium or long-term investors. Now, I had a bit of a chat with this person, and they're much more of a buy and hold, more longer-term index type of investor. And that's okay if that's what you want to do. I'm not saying anything about it. You do make more money if you're a little bit more active as an investor. It doesn't take much to become an active investor. There's not a lot of time, a lot of knowledge. Anybody could buy my book off Amazon or in bookstores, and they'll send it through to you in the mail, and it'll teach you some rules around buying, selling, how to find stocks, etc. that you need, how to do your portfolio, position sizing, how to manage a portfolio. Really, really simple. In 1 hour a month, maybe. That's pretty much all you're going to need after you read my book. If you want to spend a little bit more time, that's fine, but you're pretty much that's all you need. Should you wait for the bottom? When's the bottom? And that's really the question is people saying to me, is the bottom in? I don't know. But let's have a look at the S&P chart. We've looked at the Dow chart, so you know my thoughts on that, and obviously we're looking at 2100 points here, so just bring up the full monthly chart here. So 2100 points is just below where we are right there. So the S&P 500 fell down to 191, so almost there. So I'm not sure where possibly you're saying 2100 was the bottom we had last month. Right now the bottom has not proven to be in, and you can see that the S&P's been beautiful. It's been making new all-time highs since way back through here, back over about 5, 6 years, 7 years. It's been making new all-time highs. It does need a bit of a time to retrace. At this point here, when I'm seeing it, looking at where are we? That's not the right spot. Let me get out of that. Let me do it again. So I know I'm in the right spot. There we go. So looking at the S&P, like I've called it out 25,000 points. I'm saying the S&P, if it does turn around and go south again, let me just get all of this out, and I'll use my little tool here, my little trend arrow tool. When it does go south, and if it does keep falling, if it doesn't go up too much here and starts to fall away, it will go down to around about that 2,000 point mark. As I said a little bit earlier, click on that, is I think probably 80% and possibly even 90% of the fall on either the Dow or the S&P and other world markets has probably happened. The big move happens there, so I think the next move down, will it be a dead cat bounce? It's really possible it could be a dead cat bounce, but we won't know until we start seeing the market rise a little bit more, and then for the next downward move. So right now, sit out, wait. I was going to say go to the beach or go for a walk in the park, but that's a little bit hard to do with social isolation now. But just sit back, wait for that dust to settle, and then there'll be plenty of time, especially if you're more medium to longer term investor and some sort of like an index investor. Now, I don't agree with index ETFs, and a lot of people are buying those, and there's been trillions of dollars going into index ETFs. But if you're somebody like that, just wait. It's not going to be a big issue to you. But let's look at the next question now. But thank you for sending the question in anyway. We've got Mr. Corona. What is your answer to people who says the market is manipulated by the Fed, which is printing money? Pretty much I say, next question, that's normal. The Fed, all world governments play with the market. It's called good fiscal policy. They print more money. They do rescue packages like they're doing now. And I think I've been hearing the Fed's printing money for 2 decades. and I'm hearing that same news all over and over and over again. Markets will tell you whether they're bullish or they're weak, and so constantly look at that. And the Fed does print money, that does push money into the economy. That's how they manage looking at inflation, and they look at trying to help unemployment, etc. So they're managing the economy doing that. Right now they're putting out a lot more money with the rescue packages that we've seen, like Trump's put out. We've got to see that, I suppose, not the dust settle on that, but see what effect that's having, and we'll start seeing that over the next month or 2 months. Once we start seeing earnings reports, we see, I think, really important, we need to see the unemployment figures going from April, see what happens with those unemployment figures. If they're not rising too much, then there could be a bit of a soft bounce. And whilst I'm not saying it's going to be a soft bounce in terms of not as hard or going into some sort of recession or depression like some people are talking about, right now I think the jury's still a little bit out. So just sit back and wait. The next question we got is from the advocate, and he says, or that person says, the markets are completely irrational, sitting on the sidelines, although damn hard when you see the markets rally like they do today. Feel like I'm at a racetrack watching 2-horse race evenly matched. And yeah, that's the emotions, and that's really what I was saying a little bit earlier. The emotions of the market are ruling right now. When the market is highly charged with emotions, like it is, you're going to get looking like it's at the casino or the horse track or whatever that is. You're going to get a lot of volatility. I don't see that volatility dying down a lot over this coming year. I still think every time the market goes down, it's going to go down fast, and you need to be prepared for that. You also need to be prepared to look at what your portfolio is, whether you're medium, short or long term, and looking at styles of stocks that will support the type of investing you're doing, and also making sure you're looking at stocks that are looking, or they are, I won't say immune to what's been going on at the moment, but ones that will weather the storm a hell of a lot better. And they could be the stocks, so the computer stocks, the IT stocks, the tech stocks, and we're going to get into some of those as we go when I start looking at some more stocks here just in a second then. And to me, some of those ones, because people are working from home, IT is a bigger issue. New computers, new mice, new keyboards, they all need Intel chips and those sorts of things. They also need drivers, the whole range of different services, internet. There's a myriad of stuff that's needed for people to work from home. So these are the sorts of areas I'm looking at, home delivery type of things. I think, as I said, there's going to be a big paradigm shift. But let's get into the next question. This one's from Jeff Patterson. I'm not sure where Jeff is, but if you want to tell me where you live, Jeff, that'll be fantastic, because I love finding out where everybody is. Jeff saying, I moved my 401k into the money market late February, which was a good move in hindsight. When the Dow went down to 25,600 points, it then slid further down. Yes, it did. I'm now worried it's rising back up to that mark. It's currently at 23,500. Not sure if I should hold off and wait for another drop or get back in again. And this is one of those ones, and it's really like, you're damned if you do, you're damned if you don't. If you don't and it goes up, you'll probably be thinking, why am I not in it? But if you don't get in, if you do get in it and it starts to go down, you're going to go, why did I get into it? So you're going to be one of those ones where you're weighing up that, and it really is about 401k is long term. That's what it is. And I don't know how old you are. You could be 60 or you could be 16 or 40, or I don't know how old you are. So whatever the time frame, but I do know longer term, if you get down, if you get into the market and it's somewhere near its low, and let's say 10 or 20% near its low, and your outlook is for 10 years plus, not a big issue in my book, because it will cover that up. But again, I'll strongly suggest you just buy big stocks, looking at, let's say, the top 10, top 20 stocks in the S&P 500. They are great, and this is where I go into ETFs, and people talk about index ETFs on the S&P. I think they're a waste of time, I really do. You just buy and hold the top 10 stocks on the S&P 500 to do better. If you're going to buy my book, Accelerate Your Wealth, at the local bookstore on Amazon, you'll see I look at the 30 stocks in the Dow, and they way outperform the market just looking at those 30 stocks with some few basic rules. They only take you 1 to 2 hours a month to actually apply, so it's simple and easy to do that. So suggest you go and buy my book, get on Amazon, do it. And if you have bought my book, please get on Amazon and do a review of my book and tell me what you think of it. Love to hear your emails as well, and if you've got questions, please feel free to send them in. I'll put them down below. But thank you for all of those people that sent your questions in, and thanks for watching this Aussie till the end of the video. Now, if you do have a question for me that you'd like me to answer, just stick them below and I'll answer them. You get typing. But again, tell me where you are around the world. That really does help me. I get excited finding out where everybody is. Remember, I do these reports every single week, so Jim and I do our chat, and so hit that subscribe button and then you'll know that we're putting them up. But also click the bell on the right of it so it does tell you when they go up. But for now, goodbye, good luck, good trading, stay safe.